Shh. Can you hear that? Neither can I. This is the quietest year in real estate for 25 years. The Toronto Real Estate Board just put out its monthly December stats, and it's not looking pretty. Let's take a look. I put together this little report so we could go over it and check out what's happening in Toronto and a little bit of the GTA as well for the month of December 2025. All my sources will be linked in the video in the description below so you can check them out yourself. As I just mentioned, this is the slowest market we've had in 25 years since the year 2000, and that's in terms of sales. We've had 62,000 annual sales. It's the lowest it's been in a very long time. And we've had a 26.5% price drop from the peak of February in 2022. Not only that, but the active listings in December has hit an all-time high. It's over 17,000 now. Even though the Bank of Canada has been reducing rates and kept them steady now, it's just not enough. There's too much instability in the markets with jobs, and there's a lot of things going on around the world where confidence is at an all-time low. We're having the reverse problem of the pandemic era right now, where listings were super hard to get. Listings are absolutely everywhere right now, but nobody really wants to buy as of yet. It's coming down to many things like we just talked about, and Darren King here seems to agree. Slashing rates isn't really going to do anything right now until people feel secure for where they want to live. We've also had a lot of people who want to leave Toronto lately. So those are potential buyers who are taking their money elsewhere, and it's keeping inventory levels really high. We're at a point right now where prices are at 2019 levels, and everything for the past 6 years of property gains has nearly been wiped out. We lost about $340,000 from the peak of the market, which is insane because if you look back at 2008, 2009 average home price levels, the average cost of a house back then was like $350,000, $380,000. There's just too many listings right now. There's not enough buyers. Let's take a look at this chart here. 2025 December sales, all-time low, 3,697. Active listings, over 17,000. If we go back to 2016, December had 5,400 sales with only 4,000 active listings. The active listings has absolutely skyrocketed. And if we take a look at the actual numbers right now, the average home price sale is $1,006,000. We're so close to finally being under that million mark. I guarantee you by next month, you're going to see headlines all over the place saying, for the first time in X amount of years, Toronto's average sale price is under $1 million. For the entire year, we're at $1,067,000. So that's all the month's averages combined. And that's down pretty significant from 2024. It's gone down nearly 60 grand. By the way, if you guys want to take a look at this, I'll post the link to this website down below. So everyone knows that December is obviously one of the slowest months for the entire year in real estate. August might come second as nobody wants to, move in the middle of summer. They just want to have fun. But if we look at the sales decrease from last month to this month, it's down 26%, just over actually. That sounds pretty bad. But what's worse and giving you a more general indication of how the market is going is year over year. So this December versus 2024's December, we're down over 8%. All of this wouldn't be too bad if it wasn't for the inventory numbers, because inventory keeps going up. People want to sell their home right now, but nobody's buying. And I think that boils down to sellers' expectations. I know a lot of people are trying to get X amount of dollars for their home because of their mortgage and whatnot, but the market doesn't care about that. You have to become realistic now. You have to understand where the market is. And if you absolutely need to sell your home, buyers are in full control. We're seeing times right now where buyers can basically take full control of the agreement. You're getting your financing clauses, you're getting your inspection clauses, you're even seeing buyers putting in offers that depend on the buyer selling their home first. And the seller can't really do anything about it because some of these homes have been on market for over 150 days. In fact, if we take a look at the average days on market now, currently we're here in December 2025 with a value of 51 days on market. We are now higher than all the way back in 2016, which was 49 days on market. This trend here is skyrocketing, and I feel like it's going to continue to go up over the next few months as well. By the way, sorry if I just flashbanged you right there. There's also another looming problem that Toronto is facing right now, and that's to do with the condo market. Condos have just flooded the entire market. While that's happened, there's been no sales in new construction either. I think the entire year for new sales in construction in Toronto was something like 5,500 compared to the average of 30,000 every year. Now, we're going to get a little bit into the mortgage side of things, and it's kind of what I touched upon before. Yeah, they have held rates steady, which is great. That does help things out just a little bit. But when you have people worried about their job, you have people who want to leave Ontario right now, and you have, whatever politics is going on in the world, people just don't feel confident to make one of the biggest decisions of their lives and go buy a new house. We're actually at a time now where for the first time in a few years, a variable rate mortgage seems more lucrative than a fixed rate mortgage. These stats are according to ratehub.ca, but variable rates have seen as low as 3.45% and fixed as low as 3.89, which also means there's a lot of people who are going to be renewing their mortgage this year and the next, and they're looking at an average of about 26.5% increase on their monthly payments when they go to renew. They locked in at the 1.8% range 5 years ago. So that takes us back to condos and what's going on with resale condos. There's so much inventory for resale condos right now. Investors, obviously, they're not touching this anymore. The problem was with investors buying so many condos before, because they built condos for investors to buy. And what I mean by that is, the typical Toronto shoebox, 400, 500 square feet, your kitchen room, your kitchen is in your living room. Investors were buying these up like crazy to rent out to people because they were cheap and they were being rented out. But now that the market has flipped, nobody wants to buy these anymore because you just can't live in them. So they're sitting stale. And the reason for that, the reason for people not even renting these out, actually, well, there's a few factors, but the immigration cap lately has actually put a huge dent into it. A lot of the immigrants who were coming here, well, obviously they weren't buying a house right away, so they were looking to rent. And, well, that's gone now. So if we take a look at Toronto versus the rest of the GTA, Toronto's a little bit more resilient. We've only dropped 4.2% compared to the rest of the GTA, which was quite shocking at just over 11%. And once again, this price correction is most severe in the condominium segment. Condos in the GTA are absolutely just plummeting right now. If you're going to live in a condo, it's because you want to be around things. You want, you're sacrificing property land for convenience, for shopping centers around you, for walkability. You're closer to work and whatnot. When you're buying a condo in the suburbs, there really is no point other than the fact that they were cheaper. But a lot of those condos in the suburbs as well were built towards investors. They're unlivable for the average family. So what does this mean for everybody, whether you're a buyer, seller, investor, or a renter? Well, if you're a buyer, this might be the opportunity you guys have been waiting for. Yeah, I know there's uncertainty, especially, with the job market outlook and whatnot. But if you have a stable job and you have the money saved up, 2026 could be your year where you get to negotiate everything. You get to set the standard for the pricing. A lot of people are like, oh, I'll wait for the price to drop more. I'll wait for the price to drop more. You're in control right now where you are the one dropping the price. You don't have to go and give a seller their listing price, especially if the market trends are continuing downwards. Obviously, you want to do your due diligence and see the value of that home if the seller is actually being honest and realistic. But you're most likely not going to get into a multiple offer scenario right now. And you could put in all the clauses that you need. You could take 7-10 day financing clauses I'm seeing right now. Inspections, obviously. The only areas where things are still a little bit competitive are actual homes, not condos, in Toronto for under $1 million. A lot of first-time home buyers are actually starting to make that move, which is great. This is what the market needed. Most importantly, this is what the people needed. People who need a place to live can now enter the market and actually get one. For sellers out there, a lot of you, and I'm not making this personal or anything, but a lot of you are a little bit delusional still, in the sense that your home that, was, you might have paid $1 million for it. It might only be worth 850,000 now, 900,000. And if that's okay with you, you should sell. A lot of people still think, oh, I could hold out. And that's fine. If you're not in a rush to sell, don't worry about it. You could still try. You probably are just wasting your time at the moment, though. So find somebody who's going to actually market your property right now. Presentation and whatnot of the house, it's always important, but it's not so much important as it was during the COVID era, where, everybody was coming to look at these houses and they were going to buy one because confidence was high. So they wanted to buy the best looking one. Well, right now it's the opposite. People know that the market is going down because for the last 12 months, we've just had negative news. So they're not going to go over asking price whatsoever at the moment. You need to be very realistic with your price. You need to do your research. Hire an agent who's not just going to give you a listing price that you want to hear. Hire somebody who's bringing you the data, or do it yourself. If you want to sell your house yourself, that's fine. Just make sure you're pricing competitively and you're pricing in the now. That's the most important thing. Prices from last year you might as well be looking at data from 1 million years ago. They don't mean anything anymore. Even prices from a month ago, 2 months ago, hardly represents anything anymore. As we just saw last November, sales were up 26.5%. Well, prices since then have come down like another 5%. So last month's data is not today's data. And you kind of have to price your home a few weeks to a month to 2 months into the future now. And we're on a downward trend. Because even if you priced your home right now at today's market value, there's so much inventory that everybody else should be doing that right now. And buyers have so much more choice to pick everything. If you come a little bit under now, they're going to come to you first. For renters, things are probably as good as they've been in a very long time, especially if you're looking to rent out a condo. You have all the options in the world. There's a ton of inventory for leases on the market right now as well. In terms of like negotiating price, from anecdotal experience, I've been able to help my clients usually get $50 under what the current listing price is. And, sellers landlords, not really asking for, give me 6 months up front, that type of stuff anymore. So things are looking really good for you as well. And for my investors, the risk right now is high in terms of thinking that you could go buy something and flip it. Flipping right now, unless you're doing some, killer job where it's like more on the luxurious side of a house in a great neighborhood as well, there could still be some profit there. On the flip side though, no pun intended, if you're an investor and you're willing to wait right now, just like as it is for buyers at the moment, this could be a golden opportunity if you can sit with that property knowing that, it's going to take a few years to get equity out of it, because you can also do what the buyers are doing and get the terms that you want and a great price, most likely the price that you want. So let's take a look at some predictions. Now, this is just crystal ball stuff by a couple of different companies like Royal LePage, Remax, and whatnot. So take it for a grain of salt, to be honest. But they think that Calgary's price forecast is going to start increasing and going up, and Canada on a whole for that matter. And they do think that Toronto's prices will continue to drop. Once again, I don't think this is because interest rates or anything like that. It's just job security, politics, people getting fed up with living here, with the cost of living, and they want to go somewhere cheaper, such as Calgary. Now, personally, Calgary is a bit too cold for me, but you do you if you can handle that, because the cost of living there is quite lower than here. And carrying on with that trend, you could take a look at some more predictions. Once again, take it with a grain of salt. Are these ever really correct? Not really. but they do give you, they kind of just make these predictions based off what's happening right now. So they think in Q1, price moderation, inventory is going to remain elevated. Buyers are still going to be cautious. By the middle of the year, Remax thinks there could be some activity rebound if economic confidence improves. And to improve economic confidence, we need job security. By late 2026, they think, well, now Royal LePage thinks that the market's going to be stabilized. My opinion on this, I think 2026 is probably going to be somewhat the same as 2025. Maybe very late into the year, we're going to start to see a little bit of a rebound. And of course, we're still going to see, the yearly spring market jump, the yearly fall market jump, but it won't be significant. So some key takeaways of everything that we just talked about. 2025, slowest year in 25 years. We're officially, it's a buyer's market right now. Buyers take full advantage. Confidence is key. If buyers aren't confident, then the market's going to stay the same as where it is right now. Supply crisis brewing. That's due to all the new construction stuff that's going on. Builders don't want to build anymore because no one's buying. So what is that going to do for current supply? Well, there's a lot of inventory right now, but it's only 8 months worth. So builders will have to start building eventually, right? Gradual recovery ahead. We're going to start the year off pretty slow again. Excuse me. Spring spike, summer lull, fall spike again. We just have to see if those spikes are higher than last year's spikes. If you guys want to check out this website, I'll put the link in the description below. If you guys want somewhere to search your homes, I'll put a link to my website, and I'll put my phone number and my email down in the description as well. If you guys want to chat real estate or have any questions, I'm here. I'm happy to talk to you. And if you're new to the channel, which you probably are because the channel is new, my name's Denis Soldo. I'm a real estate agent at AXP. I'm going to be doing these monthly market reports every month. So hit subscribe, follow along, and let's get it.